I'm Katharine Patel. I'm a partner in Buzzacot's charity and not-for-profit team. I'm going to give today an introduction to the Academy's reporting framework, covering some of the accounting points, particularly those coming through from the ESFA's accounts direction. So really, just to start off with very much the background to the reporting in the sector, and I'll go relatively quickly through this as you're probably already quite familiar with this, but really understanding why Academy trusts report as they do. So firstly, you are UK companies limited by guarantee, and you're also exempt charities, so under the principal regulator of the ESFA. So being an exempt charity is at the core, as this means you need to follow the charity reporting frameworks. So your accounts and annual report must follow and comply with a certain degree of regulation and therefore complexity. So the reporting must also comply with the Companies Act reporting, UK accounting standards, so FRS 102 is the prevailing UK accounting standard that you follow, and as exempt charities you should also follow the charity reporting framework. So this comes through as the charity statement of recommended practice, and that is based on FRS 102, so normally referred to as the SORP, the charity SORP. The ESFA takes this and through its accounts direction also has additional reporting requirements. And actually what the ESFA does in their annual accounts direction is to bring together all of these requirements, both for single academy trusts and also multi-academy trusts. And this is predominantly done via the guidance document, but also via the model set of accounts, what they call the Coketown model accounts, Coketown Academy model accounts. The ESFA makes sure that those Coketown Academy model accounts comply with all of the relevant regulations within the various frameworks. So that's companies, charities, and also the ESFA additional requirements. So occasionally the ESFA will reference within the accounts direction guidance and the model accounts to company reporting, charity SORP reporting as well. So further sector guidance, pretty much where the level of detail in the accounts direction isn't quite there and you need to refer to that other wider guidance. So in terms of the ESFA's requirements, so you're reporting for each financial year to the 31st of August, and the Academy's accounts direction incorporates all of the requirements in terms of the reporting around FRS 102, the charity statement of recommended practice, and then also builds in the ESFA's additional requirements. And it tends to be those ESFA additional requirements that really bring the areas of greater complexity to the accounts and additional disclosures as well that you need to provide within your Academy Trust's annual statutory accounts. So the aim of this session is to cover some of those specifics for the sector and to provide a refresher, both for the narrative reports that go with your accounts, but also in the presentation of the financial results and financial position of the Trust. We include reference here to the model Coketown Academy accounts, and some of those pages from the model accounts are replicated within the slides for your guidance. The ESFA also within the accounts direction mentions some of their good practice guides. These have come out over the past few years and are also really useful to refer to in particular areas. So for example, a couple of areas that the good practice guides cover. We have one on streamlined energy and carbon reporting, if you're required to disclose that within your trustees report, and also one on going concern as well. So well worth a read through in conjunction with the accounts direction, and particularly if you have specific areas of focus within those guidance documents that you need to adhere to. So, first of all, I'm going to look at the narrative sections of the accounts, starting with the annual report and the key elements of those narrative reports. So what's included in the narrative reports within an annual set of Academy Trust statutory accounts? The really key major item, first of all, is your trustees report. And ultimately, that is the report that tells the readers, the public, what the Academy Trust has achieved within the year, its financial performance, academic performance, and also looks at some of the organisational governance structures. This report has to be heavily tailored to the specific Academy Trust. What follows that is another large narrative statement, the governance statement, and that's made by the trust annually by the trustees, and really looking in a more prescriptive format, but again updated for the Academy Trust specifics, but looking at these governance structures in more detail. So, for example, looking at the board, meeting attendance, the subcommittees, risk management, internal control, also covered within here, and I'll come on to this in a little bit more detail shortly. The accounting officer then makes a statement on regularity, propriety and compliance. This is a template report set by the ESFA, but does assume that all is okay in the respect of regularity. Obviously, if there is anything irregular, then the format of that report may change. And again, we'll come on to this shortly. And then we have the statement of trustees' responsibilities. This is in a very prescriptive form. There's wording included within the model accounts, the Coketown model accounts. So literally the trustees' responsibilities statement can be copied and pasted into your annual accounts. No tailoring is necessary there. And then following that are the two auditors' reports. So a couple of reports from the auditors. The first will be on the financial statements and the second on regularity. The regularity report is driven by the ESFA requirement, and a template is included within the Coketown Academy accounts. The financial statements report, however, will be given to you by your auditors, because they will define some of the wording that goes within there and will follow their own template. So make sure you liaise with your own auditors in respect of that. The ESFA feedback around the narrative reports over recent years has been that Academy Trusts haven't necessarily tailored those reports quite so sufficiently as they should have done, particularly when you're looking at the trustees report and the governance statement. Too much has been copied from the Coketown Academy model accounts, and therefore you must make sure that year on year you're reviewing your disclosures, you're checking those to Coketown Academy, but you are very much tailoring those to the trust. Don't follow the template text necessarily, particularly where it's expected that you should be updating this for the circumstances of your own trust. So a lot of requirements here in terms of the trustees report, and the accounts direction and the model accounts really drill into the trustees report in a lot of detail. I'll run through some of these items. Certain items only required if you're classified as a large company by company law. So just be aware of those. If you're a single Academy Trust, you might not be drawn into some of those necessary requirements in terms of the requirements for the trustees report. There are numerous links within the accounts direction and the model accounts to the guidance, company guidance, for example. So just running through the list we have here, first of all, the reference and administrative information. So this is really your list of advisors, list of your senior leadership, senior management team members, but also a list of the members for the trust and the trustees who've served during the year. You should make sure it reflects those who've served during the year, but also the members and trustees at the date of approval of the accounts. So if you've had post-year end changes prior to approval of the accounts in November or December, then any post-year end changes to members and trustees must be reflected within that list as well. So it's basically the trustees and members who are in post at the point of approval of the accounts. We then go to structure, governance and management. Although heavily tailored to the trust, it is an area that year on year is probably very similar for your own individual trust. You should review it and make sure it is remaining relevant and up to date, but ultimately it will be pretty stable year on year. So looking at the arrangements for remuneration of key management personnel which are required here you need to define who key management personnel are. Typically, that will be the trustees, so the board members, maybe called directors for your trust, together with your senior leadership or senior management team members. Here you look at how you set pay, the remuneration for that group. So normally trustees not being remunerated unless you have some employee trustees, and also looking at how you set pay for the senior management team. Later on in the accounts, within the notes to the accounts, you'll be disclosing the aggregate pay to that key management personnel group. So important that you're consistent here with what you're disclosing later on in the notes to the accounts. A few years ago, the trade union facility time requirements came in, so remains relevant if your trust has over 49 employees, so going to be relevant for pretty much every trust. And then you have the engagement with employees under this section as well. This is also based on employee numbers, so if you have over 250 employees within the trust, then you're required to give a statement here. And that's on how the trust engages with its own employees. And again, further detail there within the accounts direction template. The next requirement is in terms of engagement with suppliers, customers, others in a business relationship with the trust. And this is only required where you meet the criteria for being a large company under the company law definition. Currently, that's based on the thresholds for revenue, gross assets and employees. So from an income revenue perspective, that's 36 million. From a balance sheet asset perspective, that's 18 million, and employees 250. So if you breach two of the three thresholds for 2 years in a row, you're defined as a large company and have to disclose this information. More information, links are included within the model accounts. So really quite a lot of detail are provided for you. We then go on to organisational structure, so any relationships with joint ventures, associates, and also any trading subsidiaries. So the function of trading subsidiaries, how you delegate to the trading subsidiary, why has a trading subsidiary been set up, for example. You may also include under organisational structure a little bit about the subcommittee structure as well, decision making and delegation. There will be more on subcommittees within the governance statement. And then you move on to your objectives and activities. So ultimately, why has the Academy Trust been set up? Your educational, charitable purposes. Your public benefit statement will go in here as well. Again, wording there that can be used from the accounts direction. And really, this is a relatively short section, but what you're looking at is what were the activities you were setting out to do in that particular financial year. And then you really move on to the section that's heavily tailored year on year and will be a much lengthier report because that's the strategic report. So a requirement of company law that you have a strategic report within your overall trustees report. The first section of that being achievements and performance. So this is looking wider than your financial performance. So academic performance will come in here, some key performance indicators, maybe some benchmarks that you've set, and starting to expand here into the financial performance as well. But you will also have a separate section on the financial review, and again, we'll come on to that in a little bit more detail. We'd also expect to see the going concern assessment statement within the strategic report. You will have detail around going concern within your accounting policies as well, so making sure that the two sections are aligned and that they're not contradicting each other. But this is the trustees' assessment ultimately of the solvency of the trust. So you're looking at a period as a minimum 12 months from the date of approval of the accounts. So really, if you're approving your accounts this December, then you would be looking to the next December, 12 months hence, in order to make sure that you're looking at the solvency, the financial sustainability of the trust for that period at least. Can the trust meet its debts as they fall due in that period? And you're making a statement around that, a positive statement to say that the trustees are happy with the going concern basis for the preparation of the accounts. Moving on then, another large company requirement. So the statement on how trustees have promoted the success of the company. Again, guidance links there within the model accounts. And then we move on to the financial review section. So really important, obviously, as you're looking here at the financial performance, the financial position of the trust, includes your reserves policy, a statement on principal risks and uncertainties, and linking that to how you're mitigating those risks and uncertainties as well, and a brief statement on fundraising practices as well. On the fundraising requirement, it's also a nil statement. So if you don't undertake fundraising, then you really should be saying that within the accounts as well. Just going back to risk management, we also need to make sure that estates management is brought in to the principal risks and uncertainties section. So making sure here that there's recognition of the trustees' responsibilities around ensuring that the trust estate is safe, well maintained and complies with relevant regulations. Partly driven when this came in around some of the DFE communications around the use of RAC within school and academy estates and the poor condition of certain buildings within school estates. So make sure, as that's a specific requirement and comes in later on in some of the other narrative statements as well. Future plans, so a statement within here can be relatively brief, maybe a few bullet points around what the trust is intending to do over the next year or so. And then again, a large company requirement, as I mentioned, the streamlined energy and carbon reporting. As per previous years, specific guidance there in one of the ESFA's good practice guides as well. Definitely worth looking at in terms of how you collate the information for that. In terms of the financial review, specifically, and just looking at what the ESFA is requiring there, the key requirement is that you are giving clarity within the financial review section of the report so that a non-accountant would be able to understand the financial position of the trust. So really, so that they can understand how the financial results are impacting on the financial sustainability of the trust and how the numbers that can be presented in quite a complicated way actually can be interpreted into the trust's underlying operational results. So really a chance for you to give a very clear view, a clear picture of the organisation's finances, including any financial effect of any significant events that have happened in the year, financial risks, uncertainties as mentioned, and what the trustees are doing with the aim of minimising those risks as well. And then really if there's anything else materially significant in the context of your operational financial results, your balance sheet financial position as well, then must be mentioned within this section. I mentioned the operational position, but really drawing that out from the accounts. The accounts can be quite complicated in understanding that underlying operational result, and we'll come on to that when we look at the presentation of the figures within the primary statements. So really, it's looking at the operational position in the context of what the trustees would be overseeing in terms of their operational budget. So the core funding, the expenditure of the trust, maybe excluding some of the pension impact and also the fixed asset fund impact. Looking at core sources of funding as well and the fundraising side of things as well if relevant for the trust. And particularly if some of that is significant fundraising that's been undertaken in the year, given the impact that could have in terms of slightly distorting some of the financial results presentation. So we'll now move to the governance statement. As I said, this is a little bit more prescriptive and the headings in the model accounts are mandatory and must be included within the trust's governance statement. Obviously, you'll tailor the wording in accordance with your own trust's circumstances. So the first half of the governance statement is around the governance arrangements. So, for example, governance reviews mentioned in here. Also the listing of your board members, so making sure that that's consistent with any disclosures earlier on in terms of board members. But what you're required to do here as well is to give the meeting attendance statistics within the governance statement. Also mention of the trust's adherence to the governance review arrangements. So here the requirement for you to self-assess annually around the governance frameworks, the governance operations, and then have periodic external reviews as well. So really noting within the statement where you are in that cycle, whether you've had an external review or and when it's next due, if not. So looking at what's been undertaken during the year, explaining how conflicts of interest are managed as well within this section. And then also looking at subcommittees and meeting attendance for those subcommittees as well. Not necessarily all subcommittees, it's really relating to those subcommittees that oversee finance and audit processes within the trust. So for a lot of trusts, you'd have the finance committee and maybe an audit and risk committee within there, but as a minimum, the finance and audit functions, so the committee that fulfills, or committees that fulfill, the finance and audit functions. So looking at the attendance at meetings and the composition of those committees, also review of the value for money of the trust. So how does the trust go about ensuring value for money? Again, mentioning estate safety and management here within that section specifically as a requirement of the accounts direction. So really, how has the trust effectively used funding in order to ensure that the trust estate is safe, well maintained and complies with all of the necessary regulations? And then the other main section of the governance statement is on internal control. So review of effectiveness of those internal financial controls in the year, and also your internal scrutiny arrangement. So looking at the internal assurance, did you have an external firm of internal auditors who were coming in to look at various areas? So making sure you're noting the details of how that's structured, the reviews that were undertaken during the year, and particularly any findings, material findings that are coming through from the feedback from the internal scrutiny exercise. There'll also be mention of risk management within the governance statement to confirm that you have followed necessary risk management processes. And from 2024's accounts, that requirement for an overall conclusion to be made by the trustees in this statement to confirm that the trustees believe there is an effective system of internal control and risk management processes within the trust. So making sure that conclusion is included within the governance statement. In terms of items that the ESFA have said that are often missed or are not covered thoroughly enough within the governance statement, we've got the governance review requirement, so making sure you're mentioning how you're undertaking those governance reviews, self-assessment versus external. Also making sure that you're adhering to the guidance around board meeting disclosures. So if the board doesn't meet very often during the year, you're required to say how they have maintained that level of oversight as trustees. That might be through the subcommittees, for example. And then the other area is internal assurance. So sometimes a bit light on disclosures around that internal scrutiny activity. So really making sure that you're ticking off all the requirements and headings of that governance statement, looking at that year on year in terms of the model accounts and ticking off the various requirements. And the ESFA really keen on governance and really will make sure that you're covering all of the relevant points within there. So just on the final narrative statement to cover as part of this session. So this is the statement on regularity. So it's a statement that the accounting officer makes on behalf of the trust and is really very prescriptive. So basically the accounting officer is confirming within the statement that there is no material irregularity or impropriety at the trust. If that's the case, then you can follow the template model accounts disclosures. If there are irregularities or improprieties during the year, then that has to be reported within the statement with monetary amounts if known. What we often see where this is the case is that the governance statement will also mention some of the issues that have come up, allude to some of it in a little bit more detail maybe, and therefore within the regularity statement you can cross-refer back to the governance statement for some of the further detail. For example, if there's been a breakdown in internal control, the regularity statement may mention that, but the detail is included within the governance statement. Again, estate safety and management also relevant here, so is specifically mentioned within the regularity statement made by the Academy Trust, so acknowledging their responsibility in that area. So they're really the main narrative statements I wanted to cover. There are the other statements, trustees' responsibilities, audit reports, but they are very much driven by the very prescriptive nature of the accounts direction or by your auditors.